This is an audio recording of the LendIt Fintech Weekly News Show. The show is streamed live on LendIt TV, LinkedIn, YouTube, and Twitter at 5 p.m. Eastern Time every Thursday. In this fast-paced show, the LendIt News team and a special guest discuss the most important fintech news stories of the past week. Good afternoon, everybody. Happy St. Patrick's Day. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech, and we are here for the weekly LendIt Fintech News Show, joined as always by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm well, Peter. How are you?
Doing great. Got your new setup, I see, in your home office there, which is great to see. And back again, we have Dan Kwan from, God, I never remember how to say your new company. How do you say it?
Nevco Ventures, never cautious.
Never cautious. I like it. Nevco Ventures. All right. How are you doing, Dan?
Good. Thanks for having me back, Peter and Todd.
Okay.
See you, Dan.
Yeah, let's kick it off. I want to start today with some big funding news. This was the biggest funding news of the week. ConsenSys. It's been in the news a lot lately, but they have raised another large funding round, $450 million, now worth $7 billion. The round led by ParaFi Capital with participation, most interestingly, I think, from Microsoft. Also SoftBank and Temasek, they're regular investors, but Microsoft going into DeFi and the sort of the whole Web3 ecosystem. It looks like this is like if not the first, then one of the first investments that Microsoft have done in crypto, which is interesting. So, what do you guys think?
I think it was. It's not surprising Microsoft is doing and jumping in to this. I think with how popular Ethereum is. And what's being built on Ethereum these days, I think you're going to see a lot more people get further involved like Microsoft has. And I thought it was interesting, some of the comments I think is Joseph Lubin made when he was talking about some of the competitors like Solana and others, how they have been incentivizing others to use their their blockchains, and that eventually they need to fix their business plan, so to speak. But right now there's a lot of interest on Ethereum. And I mean, this is where finance is going. I think, the fact that big tech is now getting involved is only potentially making this even more exciting. Than it already is, because then you're bringing not only the financial and crypto enthusiasts when you're talking about some of this stuff, but now you're bringing in huge big tech corporations. And I see later we'll get to the X factor that maybe Apple could get to be in the space, but it's everything going on in crypto right now is beyond fascinating.
Yeah, I totally agree with what Todd just said. I think it's interesting to see, Web2 companies are joining bands with Web3. So what's the old adage? If you can defeat them, join them. So, I think it will be even more interesting if Block, Jack Dorsey became an investor in one of those Web3 companies, because he's a big doubter, or even Elon Musk became an investor in Web3. Both of them have, deep suspicions about the future of Web3. And the other thing I think is really interesting is, this year, as you know, from the venture side is very different from the past 2 years. Valuations are dropping, and you can't just raise a round with a deck and some fancy charts. So, and this, especially, I think the pressure is on the late stage, growth stage companies. It's harder and harder to raise big rounds at a hefty valuation, and I think it's really telling that crypto firms or ConsenSys in this case in particular has still continuously got the investors' strong interest, and they are able to raise a big round with still very high valuation.
Right. Yeah, it's the crypto seems to be not as impacted, it seems like, as traditional fintech, shall we say, by some of these valuation issues. But anyway, let's move on. Let's go straight in and talk about Apple, because there was an article in Bloomberg this week talking about Apple, saying Apple is crypto's biggest wild card, because it's really true. Apple, obviously, monstrous scale, largest company on the planet, depending on the day. More than 1 billion people use an iPhone. I've often thought, I go and use my Apple Wallet on a regular basis, and I think, it could easily be a fully featured, they could add crypto to that so easily and just turn the industry on its head. That they could decide to make a secure on-ramp to Web3. That's what this article is saying. Browser extensions in Safari could be the way in. Tim Cook has said he owns crypto as a part of his diversified portfolio of many, many billions of dollars. But it's Apple has been surprisingly quiet on a trend that feels like it's unstoppable, and we just haven't heard much from them.
And sure, you go ahead, Dan.
Oh yeah, so I mean, maybe the question for I'm curious about your thoughts. I mean, we just talked about Dorsey and the Musk. They're poo-pooing the Web3 idea. Now we're talking about Apple is a wild card. So you're talking about a Web2 company. You're at the mercy of a Web2 company to the success of Web3. What does it say to the future of Web3? No, it's a legit question. I have been really thinking about this, and I don't have a good answer. I feel the arguments on both sides are very, very legit.
Mm-hmm.
I also think some of the other stuff that Apple prides itself on, like privacy and that stuff, lends itself to the Web3 universe, which is decentralization, privacy, own your own data. Like, these days you can now shut off who sees if you opened up an email or not. It's like, it feels like they've moved further in the direction of some of the Web3 principles, I guess is the better way to say it. But yeah, I mean, it's a good question, Dan. I don't know. I think ultimately there's going to be this, I don't know, existential battle, but this battle of, is Web3 going to be built by, some of the companies that are currently building it, or for it to really reach massive scale, does it need a Microsoft, Apple type to jump in full steam and bridge that crypto enthusiast large scale population? I don't know. It's a question I don't think we'll know the answer for a couple of years at least. I mean, everything's moving so fast, so maybe it's going to be a little bit rapidly, but I still feel like there's a few years of this figuring it out stage.
Well, let me just say one thing before we move on. I think Web3 needs a good on-ramp. It doesn't have one yet. If you try and go and any of these tokens, it's a total pain in the ass to buy them, to stake them. It's not easy. It needs a complete overhaul of user experience. Apple is the king of user experience. The way I look at it is Web3 needs on-ramps. These on-ramps can be provided by Web2 companies, and I think still maintain a lot of the integrity of Web3. But anyway, let's move on. We're going to stay with crypto. We're going to go across the pond and talk about the EU, the Markets in Crypto Assets legislation, otherwise known as MiCA, M-I-C-A. It advanced this week. And originally they were thinking about banning, which would have effectively been a ban of Bitcoin, banning proof of work. They have not. They took that out at the last minute. Now, this is not legislation. It's kind of like, the way I look at it, it's almost like legislation coming out of committee in Congress. That's the equivalent in the EU. There's going to be a lot more debate about this legislation. But the EU have said they aim to have a regulatory framework for digital assets by 2025. So they're not rushing things. So anyway, But it was good. I mean, in many ways, the Bitcoin is not going to be banned as the way it looks like right now in the EU.
I feel like that some of the same arguments happen when you talk about energy consumption in crypto. It's like there's the argument on both sides that it's it's super energy intensive and hurts the environment, but at the same time, there's others that can argue against it. I think the more interesting part is that 2025 a lot's going to change between now and 2025, and if they're developing rules or regulations or at least a framework, like it feels like how outdated is that framework going to be by 2025?
Hey Tom, that's I think 2025 is pretty fast in my view. I mean, think about
I guess from a regulatory perspective.
Yeah, from regulatory perspective, that's I wouldn't call it a fast, but that's what I call expected. That means the regulators are doing their job. No, I think, I mean, crypto ban or a Bitcoin ban. I mean, China did that, right?
Yeah.
So does that really stop any Chinese person to own Bitcoin? I'm sure there are ways for them to bypass the Great Wall to do that. So, I mean, if this did become, unfortunately, law in EU, I'm sure there will be Europeans will vote with their feet. They're going to buy Bitcoin from other ways. So I just feel like, I mean, I'm glad they voted down. I think the vote was 30 to 23. It was a sensible vote. But I can't imagine even in today's age where, people in power still think they can just use rules to ban certain things that are, obviously controversial, but there's a strong usage, and it's a valuable asset class. If Tim Cook uses it, I mean, I'm sure Tim Cook will be filing complaint if this one was banned. Right.
Okay, well, let's move on. We're going to talk about actually your former employer here, Dan, the CFPB. They began an inquiry into buy now, pay later. It made a big lot of news. We covered it here on the show in December of 2021. The BNPL platforms had until March 1 to provide answers to a whole bunch of regulator questions. Public comment is open until March 25th, so another 8 days as we're recording this. And the CFPB said they're going to move pretty quickly here because buy now, pay later has just exploded on the scene, and there could be a new set of recommendations coming fast. They are gathering public complaints, and not a whole lot of complaints considering the volume that is going through a lot of these platforms. But Dan, love to get your thoughts on this one.
Yeah, I mean, define what quickly means. We just talked about 2025 for crypto is, in my view, is pretty reasonable time frame. I mean, the CFPB's hands are kind of tied as of now, right? So I just want to say that was a sort of order that they issued to the top, buy now pay later firms to gather information. And the quickest they can do is to gather, the input and write a report, and that will be naturally the next step. And for them to really embark on a rulemaking exercise, that's going to take a long time to do. I always think the more immediate thing they can do, obviously, look at the tools at their disposal. The first thing that comes to everyone's mind is enforcement, right? So are there any unfair, deceptive, or abusive practices that these companies are engaging, so they can use that tool to do that? And one of the sources of such information is obviously the CFPB complaints database. And but if they really want to think long term and put a more regulatory, more sort of certainty to put more certainty to the market, they have to engage on rulemaking, and the larger participant rule will be naturally their choice of tool to do that. Otherwise, if you want to make them credit, you have to talk to Congress. Congress has to pass amendment to truth in lending, so that the truth in lending protections can be extended to BNPL. Otherwise, you just have to expect companies to do this on their own voluntarily.
Right.
I don't see any substantive policy changes in the near term, but the CFPB can definitely signal to the market this is what they want, and I think it's more likely that the industry will voluntarily adopt some of those things that are already in truthing lending to their customers.
Mm-hmm.
I mean, it kind of just sets them up if they were to voluntarily do it. I mean, it's kind of like you're implicitly working with the regulators in that sense when you start doing stuff like that, right, Dan?
Yeah. I mean, the CFPB can, using overdraft as example, right? So there has been lots of market pressure, the competition from Chime, Varo of the world, forcing FIs to say, you know what, we cannot really indefinitely continue this practice. Let's just drop the fees for good, or let's just cut the fees. Then the CFPB chimes in and say, hey, we come up with this report. We put a lot of pressure on you, and the more FIs sort of fall in line. So I think I'm not equating BNPL to overdraft, obviously, but I think we can see similar dynamics happening here when a long-term policy rulemaking is going to take a long time because it's long-term. Short term, you can use enforcement and other pressure, public pressure, to encourage, to nudge industry to move in the direction that you think is desirable.
Right. Okay, we're going to move on. We're going to go back to the world of DeFi here for a second. Quadrata, which is a relatively new company, actually very new company, started just last year in August. They made an announcement this week that they have now got a Web3 passport for KYC on DeFi. Now, there's a lot of, people are just casual listeners, they're not going to know what the hell we're talking about. But, basically they have, for DeFi, decentralized finance platforms, one of the things that really is a sticking point and that regulators hate is the fact there's no KYC or AML checks on any of this activity going on here. Now, what Quadrata has do, they really are working with Spring Labs, working with and these are two people who started Quadrata that came out of Spring Labs. And they're going to be working with Spring Labs on their digital passport, with TransUnion, who is going to do sort of the KYC, and that's off-chain data. There's going to be no identity stored on-chain. It will be like there's going to be stored in an NFT, they say, but it's going to be like a blue check mark, like a Twitter blue check mark, just saying, yes, you have been KYC'd, and you'll be able to then, it only works with Ethereum mainnet now, with you'll be able to put it in your MetaMask wallet or other wallets, I believe, and it's going to provide a little bit more certainty, and it gives us a chance to actually have more financial products on DeFi. I think it's a pretty interesting development.
Can you buy that NFT?
Yeah, the NFT is not going to be on marketplaces. You cannot buy and sell the NFT.
I was laughing the whole time you were talking about it, Peter, because it took you a good minute and a half to get through that, yes. Which goes to your point that you were saying before of how far the industry still has to go to make this usable to the everyday person. And some of this stuff obviously happens in banking. It's in the background that people don't care about either. There's KYC stuff that goes on in the background. There's sharing of data. And most people don't necessarily care about that. They want to swipe, or they want to open an account. They want to fund the account. They want to buy a stock. They don't necessarily care about how some of that works. But, there is a lot of complexity here that I think the industry still needs to figure out in a way that is widely consumable, that it doesn't feel as if, oh my God, what is going on here? Mm-hmm. And I still think there's a way to go there. I agree with almost everything you said. It's super fascinating, getting TransUnion involved, keeping the data off chain. But it feels like there's still so much to go to get this to a place that everyday people can just use it.
Yep.
I think it's really a fascinating application that they are developing here. I think, as an investor, I'm, I think my antenna just come up. I think it's really interesting. You have a token on chain, and you really, which doesn't store anything, right? There's no PI in the token. The NFT is not tradable. You cannot sell or buy. And every time someone, a DeFi app that really pings the app, pings the token, then you can instantly KYC the customer, and I think this is a really nice bridge from off chain to on chain. And I think obviously all three of us, I'm sure we're using some DeFi apps. So if these guys are seeing value using them, I think there's something there. Especially if Web3 is going to be the future of financial services, I think that we are going to really see a lot of bridges between off-chain and on-chain, and I think they are probably I see them as one of the pioneers doing that.
Yeah, I mean, exactly. I think it's extraordinarily fascinating, and because I feel like there's so much that needs to be built, and this is just one of the.
I think some of the coolest things that you just said was you mentioned TransUnion, old school financial services firm, working with Spring Labs with Quadrata, Ethereum mainnet. It's all it's Web 2, Web 3, old finance all coming together. And so to me, that's the the most fascinating of the takeaways is you're already seeing old and new coming together.
Yep. Anyway, let's move on. Also in the news this week, Green Dot. We don't talk about them very often. We talk about Plaid all the time, but Green Dot and Plaid are doing.
Did you get your settlement yet, Peter?
Sorry?
Did you get your settlement yet?
I don't know. I think I might have opted out of it. I didn't feel like I should be taking. I was not harmed. So anyway, the go-to bank is Green Dot's digital bank, and what it serves this sort of underbanked population. They are in Walmart stores and a whole bunch of other places that these people can just get sort of bare bones financial services, but they weren't integrated with Plaid, and now they're going to be. So you can now sort of use your go-to bank as your actual bank account that can then be all the other fintechs and banks that want to access sort of that information, it can now be connected through Plaid. So that's that was I guess a win for Green Dot.
Is that a? So I honestly when I read the headline, I was scratching my head, and I read the article. I sort of still scratch my head. I had to read it twice before I realized, and I could still be wrong, that this is just basically a data bilateral deal between Plaid and Green Dot, where Green Dot users, when Green Dot users connect their, go-to bank account with, let's say, with Venmo, they don't need to. Plaid does not need to store their credential. They can just do this API.
That's exactly.
That's what it is. Okay. Yeah. Okay. So I was right. Okay. So I think, so Green Dot entered deal with Finicity last year. So this is their second deal with a major aggregator. So probably in a few months, we'll see Green Deal striking a deal with probably Amex or Yodlee. I think this is really the future where, screen scraping or credential-based access will be curtailed.
Yeah.
And more secure access mechanism will prevail.
Mm-hmm. Yep. And I think it's funny you said we don't mention Green Dot very often, Peter. I don't think they get enough credit for some of the stuff they've done to at least help people that are in that kind of maybe on the outskirts of the financial system. And for a long time they've had the prepaid cards.
Yep.
For people that didn't want a traditional bank account or couldn't or whatever the case may be, and have been able to increase the amount of people in the financial system for a long time. And I know recently they shifted to more of that BaaS embedded model, but I still think they're doing interesting things for the consumer, especially the ones that are lower income.
Exactly, they've got their core customer base really needs banking services, and they are providing a good service there. So anyway, I want to move on to another interesting article. This one concerned OppFi, and actually it was last week, but I didn't find out about it till after our news show last week. So anyway, OppFi filed a complaint against the California Department for Financial Protection
and Innovation.
Yes, Protection and Innovation, right. DFPI. It used to be, I had a different name until recently. I still haven't quite got the acronym down. But anyway, they're basically saying that like valid when made has been reaffirmed by the OCC, the FDIC, a US district court actually reaffirmed it. And what they're saying is that, because OppFi work with a partner bank, the partner bank issues the loan. And then, the enshrined in this is the fact that this is a valid loan where that state chartered bank is located, and then it's sold, and it doesn't, it can be, California is saying is, well, this is above our interest rate caps, but there's laws on the books that allow this, and so I like OppFi. I think they get a bad rap sometimes, but I think they're a good company, and they're going out against the state of California.
So OppFi decided to settle with the AG in DC.
Yep.
On a similar complaint, but obviously DC is a much smaller market compared to California. So so the one thing I want to say is OppFi may win the battle, but they may lose the war. So yeah, I mean, the loan is issued by the bank, and the bank can export interest rate to any of the rest of 49 states. But I think the bigger question is what does the FDIC think? If the FDIC or the OCC, not as a matter of law, but as a matter of preference or guidance, tell their supervised banks not to work with firms like OppFi, then even if they win the core battle, they won't be able to continue the partnership. I think that's a much bigger policy question.
Yeah, it's a bigger conversation too, because I think that's, I believe that, people should be able to be served, because you can make the argument, okay, then OppFi can't operate. Then what is someone going to do who doesn't qualify for credit anywhere else? And because OppFi is working with, these subprime consumers, and they default a lot, and so you have to have high interest rates. And anyway, I feel like the government I've never heard of a good alternative. Okay, let's just cancel it. But let's provide an alternative. And I haven't never heard anyone really come up with something that works. Anyway, let's move on. Let's end with something that's I think a little bit light, a little lighter note to end the news show. American Express, the grand institution that they are, has filed trademark applications for banking services in the metaverse or any other type of virtual world. They've done 7 applications that were filed just last week, March 9th. There's a whole bunch of things that Amex wants to potentially offer. Virtual payments. They're going to have a
pony. They're just going to put a pony in there, like JP Morgan did with their tiger.
That's right. So they haven't talked about creating a bank branch like JP Morgan did, but they want to. Clearly, I think this is a defensive move and say, right, if the metaverse takes off, we don't want to be left behind. It's what it looks like. What do you guys think?
Hey, don't want to be left behind. I may not know what the hell that is, what the future lies. I want to have just like Visa bought an NFT that was sometime last year. Yeah. I think it's a good thing that these large banks are experimenting, are trying, at least they want to have a seat at the table. And I think the same thing we just talked about Quadrata, TransUnion, is a partner, and I think they're probably also investor in Spring Labs. And I think these are the things we see the old financial service companies, firms, and the new age Web3. They are all sort of working together.
There's only one way to really truly understand any of this stuff, and that is get involved.
Yep.
And if they're not involved, then clearly they're not going to understand it to a certain degree. You get involved in DeFi, you start to understand how that universe and how that world and how transactions and on-chain, off-chain, all this language starts to fit together. Same with the metaverse. Eventually, we're going to hear all different language with that. And if you try and experiment, you at least get a sense for, all right, here's the boundaries, here's what we can or cannot do. If you're on the outskirts saying, let's wait and see, eventually it could pass you by before you're even jump in. And so I think you're going to see a lot of firms start doing little things like this, just trying to get a sense for what this or that means. Today, it probably doesn't mean very much, but in 2 or 3 years' time, they can be like, yeah, we've been in the metaverse since 2022.
Yeah. Yeah, it reminds me of something. Reminds me of what you just said. Then Todd reminded me of Visa and Anchorage, and buying, like, they bought a CryptoPunk. Visa did last year when.
Yeah, I think Dan was mentioned that.
Yeah. So it's that's the sort of thing where we have, you've got to be in it to understand it. You can't just read about it. You've got to actually start using and participating. And I think that's what American Express is doing. Anyway, we are out of time. But before we go, a reminder: we are just a few weeks away now. I think less than 10 weeks till LendIt Fintech USA. The biggest fintech event of the year to date will be in New York City, in person. If you haven't got a ticket, what are you waiting for? Go to lendit.com. Anyway,
if you're a startup, there's a program for you. If you're crypto Web3, there's stuff for you. Digital banking, lending, there's everything for you at the event.
Yes, indeed. So with that, yes, thank you, Dan. With that, we will we'll sign off. Be back here again same time next week. Actually, I won't be here. It's my birthday next Thursday. So
wow.
Todd is
early birthday, Peter.
Happy birthday, Peter.
Thank you. Todd is anchoring the show next week, and so make sure you tune in for that. Bye, everybody.
See ya. Thanks,
Dan. Bye.
Thanks.